Swadikap. I've been told that there might be some Thai-speaking audience here, so I'll try to speak a bit slow. If you find me going very fast, just raise your hand, so I'll go slow. I also know that it's very close to the lunch time, so not the best time to be talking, but I'll try to make it interesting enough, hopefully for you, to stick around. So I wanted to talk about the SME digital financing space, and I thought best to talk about it through an example. And the example is from the company that I work for, Funding Societies. So bear with me, and hopefully you'll have some questions at the end of the presentations, and I can further clarify your doubts, if any. So we're talking about SME digital financing space. So we talk about a typical SME who, beyond their core business, also have to manage their finances, right? So they have to create invoices, collect payments, they have to do the accounting, and then they have to manage the cash flow gaps that they may have because of delays in payments or immediate payments that they have to make to the suppliers. So, and it's not easy for them, right? It's not easy for them because there is a huge SME lending gap in Southeast Asia. So if we talk about the ASEAN 5 biggest economies, and I'm talking about these economies because these are also the countries where we have presence, you will see that the SMEs contribute quite handsomely to the GDP, with almost 61% in Indonesia, going down to almost 34% in Thailand. But there is a big gap. There's a big gap. You see, in Indonesia, the SME lending penetration is only about 10%. Thailand does quite well, but even by doing well, it's still at 31%, which means there is still a gap of almost 69% in Thailand. In terms of absolute amounts, we can see that there's more than $400 billion US dollar gap in Southeast Asia when it comes to SME digital financing. Thailand contributing to almost $51 billion of that gap. So that's where we come in. So Funding Societies is the largest digital financing platform for SMEs in Southeast Asia. We provide products like trade finance, which is the biggest part of our portfolio, as well as revolver, term loans, as well as cards. We have two typical card products. One is Elevate, which is for short-term working capital requirements. And there's Card Up, which basically helps anyone, actually, it's not just for SMEs, but even consumers, to convert their non-card transactions into card transactions. Which means, for example, typically how do you pay your rent? You either transfer or you maybe pay by checks, right? But you can pay by card, through Card Up, and thereby earn reward points. What we have done so far, we have been around for about 8 years. We have given out loans to more than 100,000 SMEs in Southeast Asia, more than 5 million loan transactions, and almost 115 billion Thai baht in terms of loans given out, which is quite substantial from a fintech lending perspective. We have because we are a two-sided platform, so we have a crowdfunding business and a direct lending business. I'll talk about that later. We have more than 200,000 investors on our platform as well. We have been growing quite fast. In the last 12 months itself, our revenue has grown by 96%. And on the payment side, there's a 144% year-on-year growth in terms of GTV. So how does this work? So some of you might be aware of crowdfunding, some of you may not be aware, but from a crowdfunding perspective, and we have two sides of business, I'll talk about crowdfunding first, is where we are matching investors to SMEs, but we do the underwriting for SMEs. And investors could be retail investors, high net worth, or institutions. They choose the loan that they want to invest into. The interest that the SME pays goes back to the investors as return on investment. So that's essentially how the model works. We also have a direct lending arm wherein instead of going through crowdfunding, we do direct. Because sometimes the loans requirement is very, very quick. So if you want to disburse fast, direct channel works better than crowdfunding. Also, if we want to give out really small loans, for example, in some of the markets like Indonesia, we have done loans as small as $500. For that kind of amount, going through crowdfunding becomes fairly expensive, and it leaves a lot of investors dissatisfied because by the time they log in to invest, the loan is already gone. In terms of product proposition, so you saw the SME lending gap in the earlier slide. And what you would realize is we are not just talking about SMEs who have no access to funding, we are also talking about SMEs who are underserved or have limited access to funding. And so that's why we have to cater to all sizes of SMEs, from large to small, but we do have a sweet spot. And the sweet spot is around the mid-sized and the small-sized SMEs. If you look at the slide, you will see that there are products which are available for these SMEs across different organizations, but there's no one organization which can fulfill all their requirements or all size SMEs requirements. For example, the larger ones typically go to banks because they have collaterals. While the smaller ones do not have as many options, they do go to banks and sometimes they do get access to products that they want, but more often than not, it's not enough. And then they have to either borrow from friends and family, or they have to use their personal credit card, or at times they have to borrow from money lenders, which can be extremely expensive as well as a frustrating experience. And that's where we come in. So we fund across the board to the smallest size, as I mentioned, small as $500 to about, we have even funded about $1 to $2 million kind of loans to slightly larger SMEs. And more often than not, these are uncollateralized, but backed by invoices, because we do a lot of trade finance backed loans. You would think that there are banks, and how do we come in, right? We actually work very closely with banks, because we have realized that banks also want stickiness for their SME customers. So when they reject an SME, they are also fearful that they will lose their customers to a competition who might be able to fund them. So many of the banks work very closely with us to actually fund their customers on the platform. And there is clear differentiation, there's limited conflict of interest when it comes to doing this because of this. Because more often than not, banks are targeting the larger and the medium-sized customers, while we just focus on underserved. Doesn't matter the size. We focus on cash flow. The banks typically focus on collateral. And then there is longer duration versus short duration. So typically, an average loan with funding societies, and this is also applicable to many of our fintech peers, is about 4 to 5 months. So it's really short. But it helps the unserved SME actually create a track record, so they can then borrow from banks at cheaper cost, or when they become bigger and they have a collateral. But otherwise, they can also take funding from multiple sources. More often than not, bank transactions, it's changing a lot, but in the more underserved areas, it's still very traditional. You have to go to the branch, you have to apply, you have to talk to the branch manager, and so on. For us, it's completely online, completely automated. And lastly, it's fast and flexible. We have loans that we can fund in 24 hours. On an average, we take about 4 to 5 days to fund any loans. So here, for digital lending, tech is very important, right? So typically, the way we work is we have built our own proprietary software, because if you can buy and lend, then anyone can do this, right? So we have our own proprietary software that we have built in-house. We do use API-level integrations to automate things for data, for processes, to be able to underwrite better. We have APIs with many of our partners who work very closely with us. But our architecture is completely modular. For example, if we have more than we have close to about 100 products across the 5 markets. And to launch a new product with, and many of you have worked with the larger organization, it can take months to launch a new product. We can do it in a few days or a matter of few weeks because we are completely modular. And of course, we take care of all the security-related risk. We are fully compliant, fully audited on the tech and tech side. So I think I'll spend a little bit more on this slide. So you also get an idea of how's the interest levels in the broader financial services system when it comes to fintech lending or SME lending. So on the equity side, we have quite a few marquee global investors. So we have financial investors such as Sequoia, SoftBank, Alpha JWC, which is more regional in Southeast Asia, Golden Gate, and so on. And we have quite a few strategic investors. And now you will see that many of them are actually banks who have invested in us, though the popular notion might be that there's a conflict of interest, right? We are competing with banks in a way. So we have Sumitomo Bank, we have Bank BRI, who have both invested in us, in our equity. We also have players like Samsung, VNG in Indonesia, and 500 Tuk Tuk in Thailand, who have all invested in our equity. Amongst the creditors, again, you see lots of bank names there. So typically what banks are doing is they're funding us to be able to further onward lend to SMEs. And this is very important to them because they actually want to support the segment, but because of structural issues or their own internal risk parameters, they are not able to fund them. And they use us to fund them either through channeling or directly lending to us for onward lending. And this gives them a rich source of data in terms of performance of these SMEs, whom they can potentially fund at a later stage. And of course, the whole point of stickiness, customer stickiness is quite important to them as well. Many of the loans that we fund are actually bank customers with some of these banks. We are licensed, so we have presence in 5 markets, we are licensed in 4 markets. So we have license from SEC in Thailand for crowdfunding business. We are also licensed in Indonesia from OJK, MAS in Singapore, and SEC Malaysia as well. There is a lot of interest within this segment, and that's reflected in the number of awards that we have won over the years, from regulators, from large organizations, World Bank, United Nations, IFC, and so on. So that's it from my side. I'm happy to answer any questions that you may have. Hopefully, you'll make it in time for your lunch. Yes, I think there's a question there.
Hi, thank you for the presentation. Just wondering, how do you navigate lending in Thailand for SME? Consider that it's very hard to get the data, and then there's a lot of a paper documentation and all these things for you to verify as well. Yeah.
So we have 2 different models of the way we underwrite SMEs. And we have tried to templatize it across markets with some local context in each market. So specifically for Thailand, since your question was on Thailand, we do primarily trade finance here. So trade finance is backed by invoices. Many of these customers are medium-sized. So more often than not, the data that we use is their invoice transactions over a period of time. And based on cash flows, based on track record of invoice transactions between them and either their suppliers or their buyers. So that's the biggest component. But we are experimenting quite a bit on the smaller or the micro side as well. And there, you're right, the data availability is very scarce. Many of them are not on credit bureau. Many of them don't have financial statements, or they may have financial statements which cannot be relied upon. So typically we have partners. We are working with quite a few close partners who have alternative data for them, which we use to underwrite. And these partners have been engaging these SMEs for quite a few years for different products. And that data has been validated for us across markets that it works in terms of being able to underwrite correctly for these SMEs. Still early days for us in Thailand. Honestly, we've only been around a couple of years here, but we have done a lot of similar work in other markets. And we hope to be able to replicate that here as well.
Okay, thank you.
Hi, Vikas. My
Hi.
name is George.
Hi,
Nice to
George.
meet you. So my question is, what happens when one of the SMEs actually default on their loans? So how do you guys actually handle it? And in terms of the investors, how do you guys answer to the investors?
Sure. So we have a few steps before the loan actually goes default, right? And I'm going by the default definition traditionally used in financial services, which is 90 days past due. So first of all, we understand that in SME lending, delays are common. And many of the SMEs are not very organized about payments. So there are multiple reminders that go to them, whether it is through email, line, or SMS, even before the due date comes in. And let's say they still miss, then our first point of view is to engage them and understand why there's been a delay. More often than not, there's a slight delayed payment from their own customers or their own buyers, and which can result in delay because primarily we do a lot of trade finance, right? And depending on the situation now, depending on where they are or what the situation is, there are different actions that we can take. So first is obviously try and see how smoothly they can repay us back. So that could mean that they will take a few more days to repay, in which case they have to pay some late interest or penalty which goes to the investors. In case they have a longer term problem, let's say the business is going down or the revenue is not as much, and it could take a few months to rectify, then the restructuring is the other option that we look at. And third, and which we hope doesn't happen, is either the business, either the borrower goes a bit hostile, missing, or is reluctant to pay for different reasons, then we have to go the criminal court case route, right? So we can go criminal case against them if they are bouncing the checks, or we go civil in other matters. So these are the various things that we look at, but there's constant engagement to understand the situation and find a solution which works on both sides. So that's on the SME side. Now, your question on how do we communicate to the investors, right? I think at every stage, the moment there's a delay which happens, we start communicating to the investors. So we have in-app notification that goes immediately to the investors, and then post that, more detailed communication goes depending on the situation. And if, let's say, we have to go against them legally or we have to employ some stricter measures, then we call for a meeting with all the investors, typically online, and we take consensus from them. The majority view is then taken and implemented. So I hope I've been able to answer your question, George. But feel free to ask me follow-up questions.
Thank you.
I think that's it then. Thank you.